Here's another really simple thing that'll keep you out of trouble. Basically, this is just 5, 10, and 20-day moving average stuff. And it's so simple. I know you people are thinking, you know, well, you didn't need me to tell you this, but I look back at my trades sometimes and I said, hey, if I just made myself a rule not to trade against the trend of this stuff, how much better would I have done? How many bonehead trades could have I eliminated, like the last silver trade? You know, I don't know how you people feel about it, but sometimes I find when I discover something new, a new indicator, a new system, whatever, when I first get it, I really like it. I think, wow, this is great. And then after a while, you say, well, geez, why did I think this was so great? And for me, I think it's because you start, when you're first looking at it, you're still learning it, you're following it, really what it's doing. And after a while, you start looking right past it. You know, you sort of take it for granted, and you stop really following what it's supposed to be telling you. And I think that's the simple thing like moving averages. You know, don't trade if the, you know, for me, if the 5's below the 20 and below the 10, then don't be long. That's it. Don't be long. Yeah? Yep.
One of the things the futures are stocks and commodities. Last month I talked about that.
Mm-hmm.
There was a whole bunch of different time frames, but the point he makes is that when they all come together, like they do at your arrows, it means the trend is changing.
Yeah, that's the other thing I'd written down here. You know, even if you got a wildly swinging market where they all come together, or one just like this where it was sort of, you know, quiet, when these things come together, something's going to happen. All right? Yeah, definitely something's going to happen. I've got about 10 pre-programmed pages in my Aspen, where that's the software that comes from it, and this is one of them. You know, I like to go through each night on the S&P and look at everything in my pre-programmed pages, and this is certainly one of them. Even though, for me, 90% of the time, like I said, I'm 80–90% mechanical. I will do things against those mechanical things once in a while, but most of the time, 80–90% of the time, I would not trade against, you know, this simple trend. I mean, just look at the silver trade. If I had followed my own, you know, thinking, I would never have been in such a bonehead trade. Right? Yeah. So two things there. The one point is really, you know, just the moving average itself, but the other thing is how often we tend to look past the things that we've learned. Okay? You know, I know I do it for sure. You know, and then you go back after you've just had a spell where you've done some really silly trades, and you say, geez, you know, well, look at this, look at that, look at that. Why wasn't I thinking about that? Because I think after we know it, we start to look past it. Right? And that's why it helps to write things out. Because once you have to write out for yourself, then you can't look past it because you have to write it down. You know what your rules are. Okay. Here's another thing that I like to look at, and I don't think you've probably seen this one before. I'm pretty sure you haven't. This is basically just two simple things. I've got a 10-period moving average of the lows and a 10-period moving average of the highs. And I've got Wells-Wilder's parabolic indicator. All that stuff's available on virtually any software that you can get nowadays, for sure. Basically, rules are pretty simple here, almost similar to the moving averages. As an indicator, basically, anytime I get a couple of consecutive closes above the top of the band, then that's probably the trend. Okay, I don't want to be trading short. If I'm closing above the band, don't want to be trading short. If I'm closing below the band 2 consecutive days, don't want to be trading long. How many times can I get in trouble here? Not many. Once I get above the band, there is minor support when it comes back to the band, but better support if you're trading consecutively above the top 10-day moving average. If it comes back down to the bottom one, generally you get at least minor support there. Sometimes pretty good support. Okay? You know, here again, you know, here we got the beans again. Remember this point? How many times did this point come up? I didn't even know this when I was printing these charts out, but I realized, hey, you know, this point here was good support. The really key support or resistance, I think, comes when you've got one of the lines coming together with the parabolic. Okay, you know, obviously, pretty good sell here. Here is one that was not as good, although it broke pretty sharp through it. But generally, and this probably isn't the best example, but generally, if you get the parabolic coming together with one of the lower lines, it's usually pretty good support or resistance. And if it breaks, it's usually pretty sharp. But generally, it's pretty good support or resistance. And this keeps me on the right side as well. And generally, I never trade breakouts. Okay? I'm always looking to buy dips or sell rallies. Okay? So everything I'm showing you today is basically, and everything that's in that little booklet, it has a lot more stuff in it, is basically ways that I'm looking for support or looking for resistance. Okay? I know what the bigger trend is. Like in beans, obviously in these charts, the bigger trend for the last little while has been down. So I'm just looking for places, where is it getting back into resistance so I can sell some. Okay? Again, same thing. I like this, so I got a few charts on it for you. Decent support here, decent resistance here. We got the parabolic and the average coming together. Parabolic and the average coming together. This is also one of the ones of the 10 default charts I look at every day. This is one of them. So the parabolic, I guess, is most people generally think it's a stop. I've always actually found it better as an indicator of support and resistance rather than, because Wilder originally taught it as a stop loss point, as a good trailing stop. I've actually found it works better, not as a stop, but as a point of support and resistance. Yeah, I'm looking for it instead of using it as a stop, whereas if I'm long and it's underneath, I'm going to get stopped out. Basically the way it was taught, and Wilder really moved technical analysis up to a different level. I think his book's still really the classic. But he taught it as, okay, you're short, you're short, you're short. Oops, it went through. I'm stopped out. Okay. Actually, I'm looking at it and saying, well, geez, if the trend's down and it's coming back here, it's not a stop. It's probably, maybe it's because everyone else is using it as a stop. Is it such a good place to sell? Okay. So yeah, I'm looking for it as resistance and support, whereas originally it's taught as, a stop loss. Maybe it's because everyone's using it as a stop that works better as support and resistance. But I really like it more so when you can get it at the same point with the average. Okay, much more so then. Okay, Fibonacci retracements, everyone's pretty familiar with it. Just go quickly through that. That's covered in this is covered in a little booklet anyway. Basically, the Fibonacci retracements are, you've got an up move. It should retrace either 38%, 50%, or 62% roughly. What I like to do is not look for one of those retracements, but see if I can get two different measures, like from this to here and here to here, and see if I can get a 38 and a 61 or 62 coming together. Okay, that's not twice as good. That's like 5 times as good as just one or the other. Okay, so basically, I'm sure probably everyone knows this, but it's up, and then how much is it going to retrace? So I'm looking so what I want to see is a staggered move so I can have more than one measure, see if I can get it coming together at the same point. Again, it goes back to the whole thing of I'm just looking for confluence of stuff. When I see a whole bunch of stuff coming together, then I'm pretty sure that it's the right one.